there's a difference between tax compliance and preparation and tax planning. And a lot of times what we have found, the reason our business is where it is that the majority of CPAs and enrolled agents and those that are trying to execute a tax return that most people engage with are so busy with their heads in the books, trying to just get through the numbers and get through those deadlines and try to provide the service that these clients are looking for, which is to keep the IRS off their back. They don't have time to navigate and understand how and what all the solutions are that can actually be utilized. And a lot of times when they may know what the solutions are, the bigger problem in Hurdle is they don't have access to the solutions and they don't have the experience implementing the solutions.
Welcome to the Contrarian Capitalist Podcast, the ultimate destination for accredited investors and entrepreneurs seeking alternative wealth building strategies. Discover how to fast-track your journey to wealth and time freedom by thinking outside the box. If you're ready to join the ranks of the Contrarian Capitalists and learn the most effective ways to reach your financial goals faster, you're in the right place. Let's get started with today's episode of the Contrarian Capitalist Podcast.
Thank you once again for listening to another episode of the Contrarian Capitalist Podcast. I'm your host and your favorite silverback, Sylvania Harrod, and boy, do I have some heat for you guys today. So I found another silverback leader. As you guys know, these are people who are out there leading their own troops of people doing real stuff, and they're not any fake Instagram influencer or any of that kind of noise. Brought on the podcast today, my buddy Robert, who is going to give us some tea when it comes to actual tax strategy, because I shared with him prior to the call, it was only a year ago that I recognized the difference between having somebody that was like a CPA that just like manage your stuff and do things, and they send you an invoice and say, go pay your taxes on this. And then once I started getting to the arena of higher dollars, you realize that people have tax strategy teams that just sit around and just, I think of it like Armageddon. Like they're just thinking shit up, like just sitting around thinking shit up. And they live, eat, and breathe this stuff. And so I got introduced to Robert because I realized, like, through another friend who said, like, you got to talk to this guy. So Robert, thank you for coming on the podcast, my man.
Yeah, absolutely. Glad to be here. Thanks for having us.
Yeah, so I like people to give introductions themselves because I'm probably going to mess it up in some particular way. So just let them know a little bit about yourself, why you do what you do, and why they should want to listen to you going forward.
Yeah, absolutely. So again, Robert Annable, I'm the president of Wealth Strategies Advisory Group, along with the Virtual Family Office Consulting Group. And this is a sister brother company that we run in Scottsdale, Arizona. We are nationwide. I'm 25 years in the financial services business with tax, alternative investment expertise. Used to work for an investment banking firm in New York for about 5.5 years, specialty designing and structuring these specific types of strategies, right? The ones that your audience and all of us are looking for on how do I stop giving away all the hard-earned money that we've worked for to the IRS every single year, right? And it comes around twice a year and it's just consistent. So my father and I built this firm, and the idea that you just alluded to with the family office is there's a difference between tax compliance and preparation and tax planning. And a lot of times what we have found, the reason our business is where it is that the majority of CPAs and enrolled agents and those that are trying to execute a tax return that most people engage with are so busy with their heads in the books, trying to just get through the numbers and get through those deadlines and try to provide the service that these clients are looking for, which is to keep the IRS off their back. They don't have time to navigate and understand how and what all the solutions are that can actually be utilized. And a lot of times when they may know what the solutions are, the bigger problem in Hurdle is they don't have access to the solutions and they don't have the experience implementing the solutions. So what I describe our team as, when you talk to a family office or a virtual family office, that coordinated effort of subject matter experts, including tax planning, that's the design team. That's like that architect when it comes to building a new home, right? Or a financial home. For us, we act on the consulting side, but we also act on the implementation side. So think of us also as the general contractors. But the general contractors aren't the one designing the plan. So you have to have this symbiotic relationship between those two entities and those two relationships to provide the highest and best value to clients. So that's what we do.
Dude, that's just amazing thinking about that, because like I'm sure the audience should know by now what a family office is, as I've educated them before. But you were mentioning a virtual family office. What does that actually mean?
Yeah, it's a great question. So most of the time when we have clients come into our office or they get introduced to us, it's always through a referral relationship. So we don't do any marketing. We may not have that name brand company logo that people recognize, and that's intentional. We want to be very deliberate about the people that we work with and the people that are looking to truly add value and looking for these types of services. So a virtual family office was created because after we developed the household endowment model, which was our first book that we wrote, all about alternative investments and what David Swenson was doing at Yale and how that would impact an overall investment portfolio. Then we started to realize in our conversations with our clients that their pain points were not around higher rates of return. And sometimes it wasn't even around fees. That tends to be the two things that people at the bar and the country club are talking about when they're not of the same net worth, because it's the only thing people really know. Like, oh, well, what's your guy charging? Well, what's your guy going to get you a rate of return? Their focus is on the wrong things. The focus should be on the value. The biggest challenges and pain points that we heard from these clients was, help me coordinate all of the things I'm trying to do. Right? They've got a CPA, then they've got an advisor at Merrill Lynch, and then they've got their, insurance guy at State Farm, and they've got an attorney that they hardly ever talk to. But none of these subject matter experts that they are relying on ever have a coordinated conversation. So how can they get the best advice if we don't know that everything we're doing is in sync? That's the first problem. The second problem was, how do you help me stop paying so much freaking tax? Right? Their bigger pain point is the number one cost of anyone earning money is the IRS. A lot of people don't think about it. It's just withholdings. It comes out of their check. It's outside their mindset. It's not in front of them every day. So they kind of ignore it. But every single year, whether you're writing a check on April 15th or you're just giving the government an interest-free loan for 12 months leading up to it, you're still giving away money to the IRS. A lot of people think, especially W-2 earners, there's no other options. They ask the CPA, what can I do? There's not a lot you can do. I have business owners that sell $20, $30 million businesses, and their CPA and their attorney and their advisor told them, hey, congratulations, pay the tax, bring the money to us, we'll reinvest it. That's not a solution. That's not value. That's just taking what you've already done, giving the money to the IRS, and then hoping you can make up for it over time. There are solutions. There are ways to mitigate that tax. The only way to do that is to have that coordinated effort of the subject matter experts, CPAs, tax attorneys, insurance advisors, risk mitigation, investment advisors, working together on behalf of the client. That's what a family office does. So traditional family offices require a $500 to $1 billion of assets, right? Think of the Zuckerbergs, the Bezos, the Musks. Those are the types of families that have their own family offices. Not a fan, LeBron James has his own family office, right? He goes out and he hires you, he hires me, he hires a tax professional, he hires all these people to be on his payroll. He pays all their salaries to work on his behalf. A virtual family office, think of it as a bite-sized replication of that, where the client can engage only the services that they need, but we provide access to all of the same solutions as a traditional family office.
Oh, dude, I love it, because as we're looking at these wealth building strategies for the audience, what they need to know is, I just want to educate and inform. That was my desire of starting the podcast, is so that they can, I'm sitting in these rooms with people and you go like, damn, can that be applied to the person who's a high earning W-2 earner? Like something as simple we were talking about before, and you were sharing like your oil and gas strategy. Like, tell me more about that, because I find that very interesting, because I just learned about it in the last couple of months.
Yeah, so there's a lot of different oil and gas strategies out there. How you access them and what may be readily available is going to be very, very different. So you can access traditional MLPs through the traditional stock market, and you can buy oil and gas publicly traded companies. But there's a huge amount of incentives that are tied to oil and gas development, drilling, and fracking. Usually the case is that's taken up and eaten up by the larger entities, right? ExxonMobil, Oxy, EQT. These larger publicly traded companies, they're taking all those benefits at the corporate level. They're creating cash flow from the development of oil and gas and distribution and sale. And then how do you get your dividend? You get your dividend from the production and sale of that resource, right? And then overall, the value of the entity on a multiple basis. When we invest in oil and gas, we invest directly into the actual wells of oil and natural gas across the country in different areas. What we get in return is we get a large, what's referred to as an IDC deduction, stands for intangible drilling cost deduction. This is available to any accredited investor. When you invest in an IDC oil and gas program, let's use an example of $100,000. I put in $100,000. I get a tax deduction in year one against active income, against my W-2, of either between 50 and 90% of my first year's investment dollars. Then I'm going to start to reap the benefits in addition to that of all of the production of that natural resource. So now I'm clipping off cash flow. And right now, those cash flows are ranging between 50 and 51% IRR per year. I have an oil and gas program I invest in every single year. My last month's distribution was 4.3%. That's for 1 month. On average, that's a 51% a year return.
Oh, yeah.
So what we're doing is we're taking tax dollars and creating dividends using the IRS's money.
Yeah. I mean, like, let's just pause for a second and think about that. Like, just doing simple math. If I put 100 grand into that asset, year one, up to almost 80 grand, I'm going to get off my taxable income. So if I'm sitting somewhere and like if I look at it, my adjusted gross income is 161, man, that knocks it down to 81. And so that difference in just like that percentage bracket is probably going to drop me like down to almost like 25%. You know, through the year, we know that most of our commission checks are paid at a much higher tax rate than 25%. Like commissions are taxed so much higher throughout that element because most of us are sitting at like our variable comp is half of that's going to tax throughout the year. So absolutely. I'm getting that money's back, as well as I have an opportunity to start earning dividends once it starts producing.
Absolutely. Yeah. So the largest cost to every earner or investor is going to be taxes. So if we can figure out ways now to mitigate the tax obligation and turn that into additional cash flow and resources to reinvest over time, now I'm keeping more of the money I've already made. If I'm in a 30% tax bracket, which one's easier? Is it saving the money I've already had through tax planning, or is it trying to go invest another dollar to earn another 30 cents? The risk you have to take to get a 30% a year return is significant. So if I can do that simply by saving the money I've already earned in those higher tax brackets, our goal is never to get somebody to zero because that's an inefficient use of capital, right? If I invest 100 grand and I write off 80,000, if I'm in an 18% tax bracket, that's not as effective or appealing as if I'm in a 37.5 or I'm California, New York, right? I'm in a 50% tax bracket. Now, some states, i.e. the state of California, have removed the ability to utilize these strategies against state income tax. So I have a ton of California clients, right? They are burdened with tax problems. What do they say? Well, I can't do oil and gas because it doesn't make sense for me because they don't let me use it in California. That's not correct. They don't let you use it against state income tax. But if your federal income tax rate is still 37.5%, you still get to utilize it against the federal income tax bracket. So even in states like California, where you may not be able to get it against all of your income, if I can tackle that federal tax bracket and those numbers, you're making some serious impact. So that coupled with tax savings in the first year, 30% tax bracket, 80 grand, I save $24,000 in tax, right? If I can do that, plus I can also get a modest, let's pretend that they, get a single or a double and they get a 20% return. I'm getting 50% of my money back in a 12 to 18 month period of time. The idea is we just continually take that cash flow perpetually and reinvest that into more different tax strategies on an ongoing basis. But tax planning requires consistent planning, not 1 year at a time. It's not a transaction. It takes a methodology, and being systematic allows you to prepare and navigate, shift our approach as things change. Somebody may have really big bonus years. They may get their bonuses paid in May, some may get them paid in December. Each client and each person is going to have a very different situation that we need to have a plan that meets that circumstance to be able to effectively do that planning.
Wow. Yeah. So as I sit here and think about those type of, you got my brain spinning because there's just so many different things I can think of, like in different moments that I wish I had that service available to me, because most of us make, like, depending on where you're at determines, like, Q4 is normally the time frame where you're going to make your largest check. It just happened no matter where I was at in sales. Like, Q4 was always your biggest check, which really, depending on when that company's Q4 was, like, I remember working at Dell, that meant that, like, my Q4 ended January 31st, which meant most of the cash I was going to get paid hit the following quarter, which was like April. Like, so on April's paycheck, it would come through. It was like February, March, April. So I knew April's paycheck, man, I was feeling good because like spring break was about to hit. I mean, it's a massive check and I have runway. Whereas like the same thing happened even at AWS, where it was like Q4 was December, but we didn't get paid until January. You know, it was like the month after the quarter. So there was always these different moments that you're going through it. And what I find is that most people that I engage with don't actually have a blueprint around wealth preservation. More, they have it more as it's like where can I go spend this money on? So for the person who doesn't have a blueprint, what's some kind of like foundational things you like to educate your clients on when you're having conversations with them?
Yeah, so it's exactly what the VFO does, right? It's that design plan. You've got to have a design and a plan. If you wait till January 1st to start managing your tax obligation from 12/31, you're already too late. Tax planning and creating that blueprint should start in February, March, and April of the current year. So we're already doing tax planning now for 2025 for our clients in preparation and navigating. We want to see the trends. If we're in a commissionable business, I want to see the trends on a quarter over quarter basis to analyze and understand what is the DNA of their financial cash flow. When am I expecting to get additional compensation? I look at their withholdings. Are you having your withholdings at a way too high of a rate? Can we reduce those withholdings or even sometimes go exempt and eliminate those withholdings so that we can receive that additional cash flow earlier in the year to be able to redeploy into strategies that can reduce my overall tax obligation? A lot of guys, they have this mindset of, I've got the money now. The withholdings have been put away. Now I'm going to start looking at where I can start putting money to invest from a growth perspective. They're looking for capital appreciation. A lot of this has to do with our generation. The current environment we live in, Instagram is terrible for this, right? There's so much FOMO going on about wanting to be involved in a lot of the different deals. They lose sight of the process of planning. The process of planning is methodical, consistent, and durable. It sometimes is not exciting. Sometimes it's really, really boring. Now, I find it exciting because I love this shit, right? So like analyzing taxes in a way to avoid giving the IRS any more money. I love doing that. And most of my clients love it too. So, you know, the blueprint, that design you're looking for, the challenge is even current advisors in our world, financial advisors at traditional wirehouses, Merrill Lynch, JP Morgan, UBS, all these, if you know the name or they sponsor a golf tournament, they all do the same shit. Right? Traditional tax planning or tax preparation work. Those two never talk, right? I can't tell you how many advisors come to us because they're like, we don't know how to execute or create a tax plan for my clients that have a tax problem. I have people paying hundreds of thousands of dollars inside phantom income because their broker's not paying attention to the phantom income that's created within their mutual funds that they're loaded up. They think they're doing a great job making money, but they're not paying attention to creating the process on how to execute a plan on how to mitigate the overall tax problem. So creating a blueprint is you've got to find people that are engaging and you can trust that offer all these different services. What I learned as a traditional financial advisor is, you know, my quote unquote label, but I consider myself a financial chemist. I'm not an advisor. My job is to put as many pieces together as possible in the right metrics and ways to create the most optimal outcome available. And as an advisor, I realized that in order to do that effectively, I had to be more proficient in the tax world and the overall planning process than I did the investment world. Investment management is one sleeve of wealth management. The majority of wealth management is everything outside of your investments.
Wow, let's dig on that one a little bit more. Tell me more about like what is wealth management, because that's an interesting topic that I don't think most of the audience knows about.
Yeah, wealth management is the coordination and a plan around every dollar that hits your financial system, right? So when I look at a tax return, it's the DNA of someone's finances. I can get a real good read or pulse. We call it a stress test. We can get a really good pulse on the DNA, the framework of how their money is flowing. That'll give me a lot of information to understand how everything else is structured. But wealth management is the asset protection piece, right? I work with a lot of doctors, physicians, entrepreneurs, business owners. They have targets on their back, athletes. You run through a red light. You You get a client that's unhappy. My wife's a med spa owner. She had a client that decided they didn't like the results of her procedure. Now, we believed, hey, they were done well. They were done right. Everything was done, compliantly. The client was unhappy. Well, the patient being unhappy can create problems, lawsuits, right? So how do I protect against that? You got to have an asset protection plan. A lot of people don't realize that the equity in your home is not protected by simply having it in a living trust. Depending upon the state you're in, how much of the equity in your home is accessible if you get in a lawsuit, it ranges. So we specialize in working with asset protection attorneys, estate planning attorneys, risk subject matter experts, meaning risk as far as car, personal, umbrella, corporate, but also life insurance, health insurance, those types of things, because there's always risk in everything that we do. What we sit back as the kind of quarterback of coordinating all of this wealth management is I'm bringing all of those different experts in every area of finance to the table to sit around our clients the same way major corporations, sports teams, institutions do. And that is, we have a board of directors and an investment committee. It's the same thing as a design team, right? And an implementation team. You need these two schools of thought, these two visions or lenses to be able to make sure that what you're designing can be implemented without any headaches. There are so many clients that come to us and they're like, my attorney never talks to my CPA. My CPA told me to do this. My advisor told me to do this. My attorney told me they're both wrong. What do I do? We avoid all those headaches by piecing it all together. And we conduct all of the conversations as consultants, as a team, before we go back to the client. So we've already navigated those hurdles so that when we go back with the client and make recommendations or start to implement strategy, we've already thought through and guided ourselves through all the headaches and hurdles.
Yeah, the thing that I'm hearing just from you in general is we always refer to it as like a traffic cop. Like in certain places of software, there's always an entity that's always saying, okay, it needs to go here, it needs to go here, it needs to go there. And then for this individual, what the value you truly provide to them is that it's we always said one throat to choke. It's like, this is the individual I can go to. They create the strategy. They're going to navigate all the other elements. And I share this from a person who's like flipped homes before. There is nothing better than having a really good GC, because my God, managing contractors was the bane of my existence, because you didn't know if they were going to show up, when they were going to show up. If you were like, if they're going to show up today. I had one element where it got close to Christmas and a lot of the contractors went home, like to their countries, and they could not get back in the country. So you're sitting in a place where it's like a project that was supposed to be due in January, because that's the expectation you have from your private lenders, has not been pushed out for another 3 months because they can't get back in the country. And the moment I realized the value of having an individual who's going to manage all of that, and all I hear is like, here's the update of the week, made my life so much easier, because my return on investment was so much better, because I don't have to deal with that stuff anymore. I need to be educated and informed of the options that are available to me in that element, but I'm not into the nitty gritty of like putting things into TurboTax and figuring out elements there, because man, you don't want to do that crap. That's
a really key point. So the idea that we heard a lot of times is, I'm spending all my time trying to piece this together myself. Well, you're not only trying to spend the time to find the right people and hope that they all mesh, but you're trying to now manage people, and are they doing what they said that they were going to do? Well, how do you know that if you're not in that world doing it all the time? So a traditional investor, right? A guy working full time at a tech company making 500 grand a year is busy making 500 grand a year and then going home, hopefully, to enjoy that with his family. To now have to go spend time trying to find a CPA and trying to find an attorney and trying to find an insurance advisor and then trying to coordinate those meetings. That's time. Time is our most valuable asset. It's the one thing besides health we can't get back a lot of times. So our whole goal is we want to buy back that client's time for them by providing this one centralized resource, i.e. our team, and we handle that entire process. So you have one central point of contact, or a team, myself and our team, that work directly with the client, and we analyze their insurance, their taxes, their estate, everything, analyze that data, reach out to the experts where we need to, because I'm not an attorney, so I can't act in law or give tax legal advice. I'm not a CPA, so I can't give specific tax advice, but I know enough to be dangerous and know when I need to have that stuff reviewed. I handle that entire process. I provide the documentation to the expert to give us their feedback and analysis, part of the stress test. So when I go back to deliver the results, what you said, it's just like going back to the doctor. Here's your blood panel. Here's all the results. Here's the prescription on how to navigate these challenges. That's what we're doing on a daily basis. But you got to have that.
It's beautiful. That's beautiful. So the question, I'm going to lead with one question before we land the plane on this conversation, which is, I'm sitting there. I'm a tech professional. I'm making over 300 grand a year. I'm doing this. I want to spend more time with my family. But I'm kind of on the fence because I just learned from listening to this podcast that a virtual family office existed, because I didn't realize that all like LeBron James and the Zuckerbergs of the world had these people. So I always thought it was too far out for me to ever have access to something like that. What is one piece of advice you would give that individual if they just, all they did was just take this one piece of advice and use it in life and go for it from there? Well, what's the one nugget you want them to have?
Well, I'd say buy our book on Amazon that talks about a virtual family office. And if you want to try to create it yourself, you can. But I would utilize what's in that book, what we talked about today. Number one, it talks about in the book, a virtual family office is meant for the folks that are trying to increase their wealth, right? Mm-hmm. This is not meant to compete with a family office, but the needs of the same clients are very, very different. Don't look at the amount of money you have as a determining factor of whether or not a family office or an advisor is appropriate for you. I have seen so many podcasts and threads go on about when is the right time to engage a financial advisor. When you ask that question, that's the right time. Why? Because you're already starting to think about what steps should I be taking to optimize every decision that I make. A lot of people think, well, I don't have the same money as LeBron James. That's great. But your best chance of getting there is working with a group like ours, working with a family office, because the mistakes along the way while you're waiting till you have enough money to justify engaging somebody are costing you more than the cost of engaging a firm like ours. So that would be my recommendation, is just take the first step. Find somebody like us, reach out to an advisor locally and ask them what they do. Do they have these resources available? Google what is a virtual family office. And again, the book is written in plain English. It's meant to be able to be digested by anyone and help them understand this is not only for the ultra wealthy and ultra rich. This is for everybody. That's why it's called a household endowment model investment plan, because it's meant for every household, not just the ultra rich.
Got it. And the name of the book? You want to show it again?
Yeah. So we've got two. So the household endowment model is one of them. I don't know if it'll show up because I have a
No, it's blocking it out right now. It's all good. Household endowment model on Amazon.
Yeah. Household endowment model. And then the other one is called the virtual family office. Your high performing virtual family office. Got a white cover, again, written by Vince Annable and Rob Annable. You can find those great resources. We've got white papers on our websites that are, even more, little bit easier to digest, right? Not quite as long as a book, if that makes sense. Both the books are on Audible. Again, not a pitch for the book. We hand them out to every client that comes in our office anyway. Yeah. So, but it's a great resource.
No, I think it's an exceptional resource. And that's why I wanted people to know about the book, because the best thing they can do is go spend a couple hours like in your philosophy of what you do. And then after that, you have a better educated conversation they can have when they go ahead and want to work with you. So if they do want to work with you, is there any site they can go to be able to?
Yeah, sure. So our website is www.wsagaz.com. Stands for Wealth Strategies Advisory Group Arizona. That's when we first started. You can go on there. You'll see our phone number on there. My email's on there. You can reach out to me directly on LinkedIn. At the end of the day, we don't charge for an introductory conversation. So if you want to explore whether or not it makes sense and we can help, we'd love to. As you know, I'm passionate about this business and giving back and helping people. And again, if I can turn tax dollars into dividends for anybody, I'd love to be able to help do that. So
tax dollars into dividends, man. I'm gonna make that a chapter in my book. So no, as we shared prior to this conversation, this is the first of many conversations we're gonna have on here. We'll get a little bit more tactical on certain elements as we go forward. But
sure.
Thank you for giving all that tea today. I know that the audience is really going to appreciate it, and I appreciate who you are as an individual.
Yeah, thank you. It's been a pleasure getting to know you as a person, and anything I can do to help you and your audience, I'm happy to do so. So thanks for having us on today.
No problem. So everybody, stay hungry, stay humble, and stay grateful. And until the next episode, cheers.